All right, welcome back in to the Road to Retirement podcast. Tony Marlette Jr. at Brookside Financial, along with Zach Patton at Anselmo Law. Hey, Zach.
Hey, Tony, how are you today?
I'm well, man. How about you?
I am pretty good. Cannot complain. Guardians just had a nice little winning streak, too. I see you're wearing your Cleveland Guardians shirt.
Yeah, got the polo on. Whether it's somewhat it's business casual sufficient, I think. So I don't think there's anything too unprofessional about it. So
No, do you have a baseball bat on your desk, too, over there, trying to scare clients off?
yeah. Yeah, we've been so busy lately. I may have to start using the baseball bat to ward people off. It's been
Would not
business
be.
has been good.
That's a good thing to hear. I mean, you don't want to hear that you have just twiddling your thumbs there at your desk. That would not be good.
No, no, I know a guy. Me and you both know a guy who would not like that.
No,
Right?
no, he would not be a fan of that.
Nope.
But if you were our Guardians catcher, twiddling your thumbs is basically what they've been doing in the batter's box. Have you seen their stats this year?
I imagine they're pretty bad.
I saw an article that said our catchers are batting like a combined like 145.
Wow, that is bad.
I mean, I can't say
It's
I'm going to do any better because,
right. Well, no, of course not. You're not a professional.
but it's
You're a
pretty
basketball
sad.
player, so
Former that Achilles there. I wish I got paid what those guys got paid.
sidelined you.
Yeah,
Yeah,
just like Halliburton, out a year still gets paid
I
45 to 50
saw.
million.
I saw that.
I'm about to
Wow.
renegotiate my contract here with Chris.
I think they went all in on that one. They had him playing in games, I think it was 6 and 7 because they needed him to, obviously. It's like crunch time, game 6, 7 of the finals. They had to realize they're going all in. They're going all or nothing on him.
Yeah,
I think they had to realize, even he did too, maybe, that he was going to miss a substantial part of next season at least
yeah.
by playing and giving it his all. He gave it his all.
Well, that's when like 5, 6 years ago, Kevin Durant tore his Achilles. It was the same injury. He came back too quick from a calf strain. And that's one of the biggest risks is all that's connected back there, which I've learned over the last few months. And you don't want to mess with that stuff because it is not a fun recovery.
No.
Unless you're on the knee scooter, then that's at least
I mean,
enjoyable.
that's somewhat fun. Yeah.
That was the only fun part of the recovery was whipping around the office.
Yeah. Yeah. Well, we had clients too that were like, "Hey, he's out of his scooter," and I was like, "Yeah, he wasn't
Yeah.
born with it, but yeah,
Yeah, I went from a boot to a knee scooter to nothing in between clients, like first meeting and a signing, and they come back and they're like, "Oh, are you all better now?" I'm like, "No, no, no. I wish."
yeah." Well, we'll talk about the big beautiful bill passage today, and I think it's relevant. There are some relevant pieces in there for our clients. We've been answering some questions about these over the last couple weeks now, and with its passage last week officially, it makes sense for us to talk about some of this, how it affects people. Obviously, just like anything else, when Build Back Better passed, we did a seminar on that. There's a lot more to it than what we go over. I want to go over the main things that are going to affect most of our clientele out there. There's a lot to it. I mean, it's literally thousands of pages. I remember when I was doing the Build Back Better seminar, it was like going through all this, and you're not going through all of it. I'm going through the relevant parts for what we need to understand to best help our clients.
Yeah, one of the big things I feel like we have a lot of older clients is Social Security. That has
Yeah.
people up. They don't understand what it means. They're
Mhm.
confused. They're like, "Oh my God, am I going to get hit with this huge tax bill now? I'm
Right.
used to having this much money. What am I going to do?" And
Right.
the bill gets into some details. And I know, Tony, you've read up on that because a lot of clients have called you about it.
Yeah, we've already been answering quite a few questions on these, and we've been getting them almost every day from people calling and asking. So the big thing with Social Security during the campaign trail, President Trump, then candidate Trump, had said no taxes on Social Security. Now, that can't really happen. There was something where you can't do it during budget reconciliation. You have to have a certain time during the year to do it. And I'm not sure how much you can actually mess with Social Security anyway. So their Social Security is still taxable. Now, if you remember the way this works before the new bill kicked in most cases, 50% of your Social Security benefit is taxable. In some cases, if you have higher income, and it's not that high and it's not that uncommon, 85%, up to 85% of your Social Security benefit is taxable. Obviously, if you file Social Security before whatever your predetermined full retirement age is, and you have earnings above approximately $23,000 per year, you're taxed $1 on every $2 that you earn on Social Security. So that stuff is all still in there. However, where the bill does pick up is if you're 65 or over, you get an increased standard deduction or an increased deduction. It's not part of the standard deduction. You get an increased deduction of $6,000. So what a deduction is designed to do is bring down your taxable income. It's not a credit. You're not getting a refund of $6,000. It's taking down your taxable income by $6,000.
That's to help offset some of the alleged increased tax burden, correct? Some people are worried about that. So this is to help lower their adjusted gross income and hopefully make them pay less
Right.
in taxes.
Yeah, that's the idea. Now it only goes from 2025 till 2028 or 2029. And then, you're going to have the same thing 3 to 4 years from now. The Tax Cuts and Jobs Act of 17 was also made permanent. So I think that's really big because as recently as, a few weeks ago, I think it was common knowledge that if you don't continue most of the Tax Cuts and Jobs Act, which was put into place during the first Trump administration, you're going to have a lot of people that are affected. People don't realize the impact of the standard deduction. They tripled the standard deduction during the Tax Cuts and Jobs Act. They changed some estate planning rules as far as the estate tax exemption. It's pretty huge now. Most people avoid it, which is a good thing. And then change around some stuff with 529s, and we'll talk about Trump accounts too. But back to Social Security and the taxation, it's designed to lower the tax bill for seniors. Now, if you're 62 and you're on Social Security, nothing changes from Social Security standpoint. So this is for 65 and over. Whether you're on Social Security or not, you get a $6,000 extra deduction.
And then the standard deduction is getting increased as well with the big beautiful bill, correct?
Yeah, so it's the standard deduction is going to increase. I think it's just an inflation increase. So look for it to be, they didn't give the final number. It was 16.5 last year, single, 33 or 32.5 for married. So look for that to increase proportionately. And then the $6,000 extra Social Security or $6,000 senior citizen boost for a tax deduction. So
this higher standard deduction is so much better than everybody trying to itemize like it used to be.
absolutely, and people would try. I can't imagine what it was like because I wasn't preparing taxes before that, but I cannot imagine the things that people tried to itemize. And we say itemize. If you can itemize, meaning in most cases it's medical expenses. If you can itemize and have things that you can take off of your taxes that are in excess of the standard deduction, you can still itemize. Most people are perfectly content to take $16,000 or a $32,000 standard deduction off their income. Very few people are going to itemize that.
I remember being in a business school studying accounting, and they're like, you guys need to know all these deductions. People are itemizing left and right. We come back in the fall, the standard deduction got increased,
Mhm.
itemized deductions had gotten cut down. And it's it's so much easier for people. Some people still track everything thinking they're doing it, and that's good. You want to know what you're spending on things, but this is
Right.
a lot better than having to go through every medical receipt, every purchase, making sure somebody didn't
Sure.
throw a McDonald's receipt in there.
Oh yeah, I that's what I can imagine. Well, I had a doctor appointment and I had to go get a coffee because I was ready to fall asleep. I want to itemize it. Like, I mean, come on. Like, let's just give you your standard 32,000 and move
Call it a
on.
day.
Yeah, most people perfectly content to take that standard deduction. And that's one of the things from the original act in 2017 that if this wasn't renewed in the bill that passed, that was set to go back down. And the standard deduction back then was like $5,000 to $6,000.
Yeah.
So
Have
one
you
other
seen oh, go ahead.
no, go ahead.
I was gonna say, have you seen the jokes now that everybody wants to get paid in tips and overtime?
Yeah. So that's what I was just going to bring up was there was another campaign promise that said no taxes on overtime and no taxes on tips. So the overtime exemption has its restrictions, and again, I don't think anybody thought it was just going to be tax-free overtime for everyone. You know, when candidates are on the campaign trail, they say these things to get headlines, and then when they put it in place, it's the opposite of under promise and over deliver. It's over promise, under deliver, but at the same time, these are things that had not been put into place before, so they should be beneficial up to a degree. The issue with the no tax on overtime, or where it what it means is if you get paid a regular paycheck and you work overtime, you can deduct up to 20%. You can deduct your overtime up to a maximum of 20% of what your regular pay was. So what this means is, say your weekly or biweekly paycheck is $1,000 and you earned $300 in overtime. You cannot deduct all $300 since that would be 30%. You can deduct $200 off your taxes. You'll still have taxes taken out of it, but again, a deduction takes off what your taxable income is. So $200 in that example would be reduced from your income, and it's $200 per paycheck, obviously, would be reduced from your income at the end, and you still owe regular taxes on the excess.
People got really excited by that. I just kept hearing all these things though on social media. I just want to be paid in tips now.
Oh yeah. Well, again, you're not going to be, and that's probably why they have to have limitations, because people would milk the system if that was the case. If there were zero tips on overtime, people would want to work 80, 90 hours a week.
Mhm.
If you're paid overtime, of course, why wouldn't you? You don't get taxes on any of that. You have to have limits on that stuff. There has to be a way for people to avoid manipulating it.
Yeah, that's the sad part is people would take it to the extremes. I mean, I would be asking Chris though, "Hey, can I be paid in tips and overtime instead
Yeah.
of
Make me an
commission and
hourly
salary?"
employee, please.
Yeah,
I don't care if we're open 8 to 8 on Fridays. Just make me an hourly employee.
yeah. All my work will be done at 8 p.m. on Friday. Oh, it's
Yep.
overtime. What a shame.
Yep. Exactly. And then you and I were talking before we went on about Trump accounts.
Yeah, those are interesting. I think it's a really good idea. I hope it works the way that it's intended.
So with these, what these do is they give every child born between 2025 and 2029 $1,000 through the end of 2028.
Yep.
You can do this before, if your kids were born before 2025, but the key is you do not get $1,000 contribution from the government. So 2025 through 2028, you can contribute, parents and employers can contribute to these types of accounts.
Yeah, as a family, there's a maximum every year of 5,000, which is going to change with inflation, of course, but it's starting out at 5,000 a year, and your employer can put in 2,500.
Right.
So the good thing is this account can grow. It's meant to be an investment account for your child. And then when they reach age 18, they can start pulling some money out for certain qualified expenses and take it at a long term capital gains rate, which is a really nice investment tool. So, I mean, they could take it out for education, buying a house, starting a business at 18,
Mhm.
and they're going to pay that long term capital gain rate rather than ordinary income rates.
Right, and that's an important distinction. So if you use it for anything other than that, you pay ordinary income on it, which could be to your detriment. So you have, just like anything else, you have to use the account for what it's intended for. Otherwise, you don't get the benefit. So this reminds me of the early withdrawal exemption from an IRA. You can use it for certain exceptions. If you don't, then you're just going to end up paying. One thing to remember too, if you withdraw these, this is basically like a custodial account on steroids, and it's with a government contribution of $1,000. So if you're putting in money to this, uh, it's tax deferred, which is nice. Custodial accounts are not tax deferred. Well, they are up to a certain point. But these are tax deferred, just like an IRA, meaning you do not pay taxes until you withdraw it. And if you use it properly, you pay long-term capital gains, which is up to 20%, instead of income taxes, which income tax brackets could be as high as 37%. So use it properly and use it for those things when you're 18, and it can be beneficial. If you
I
don't
did
use it for what
read.
it's for, then it's probably gonna be a detriment.
I'll be curious what banks are pushing these because it says you can open it at any bank of your choice. So I'm curious if we're going to start seeing promotions banks are doing or advertisements for these type of accounts to try to spur people on to do just set these up. Because
Mhm.
even if you're not making contributions, there's $1,000 in there for your kid one day, and hopefully
Right.
it grows.
Yeah. And it has to be invested in an index. So if you
Correct.
go to a bank, you can't just leave it in a money market. It's got to be invested in a broad index, say like an S&P 500 ETF or mutual fund. So you have to invest it in that. Um, and just keep in mind that those ramifications that we talked about too.
I do like how there's other uses that are considered a good use besides just higher education.
Hmm.
Because we see more and more people entering the workforce or wanting to start their own business. And this is nice seed money for that. Or if they want to put a down payment on a house, there's a lot of good expenses that you can use this for.
Yeah, it reminds me of, if we go back to the 17, between the Secure Act 1 from Trump, the Secure Act 2 from Biden, it reminds me of how 529s are vastly improved and they're so flexible and useful now. I was never a proponent of 529s, but I think between those two bills, I think they have a lot of flexibility now. They have more flexibility than they did. So these are all good things as long as you use them properly.
Let's hope that they follow their intended uses.
Yeah,
And
and I mean, you got to think too. Take anybody who's listening, and either side, whatever side of anything that you're on, take your politics out of it. And if you think this is a beneficial account, use it. I mean, you don't if you whether you like the administration, whether you don't, whether you like the previous administration or you don't, you should still utilize these things that have been put into place, like 529s being more flexible, or the Trump accounts. It seems like a reach to me to see somebody that is against the current administration going into a bank and asking for a Trump account. But you should use it, call it whatever you want. You should still use it if you find it beneficial. And I would say the same thing about the Build Back Better or the Secure Act 2 that was put in place, or the original Tax Cuts and Jobs Act. So, try to take your own views out of this. And if there's something that's beneficial, you got to do it.
yeah, I mean the estate tax exemptions now at 15 million for next year. and it's locked in for a while to stay up this high. People get mad about stuff, but they're going to be happy when they're not paying any estate tax at 40%.
Well, right, right. How many people have we had ask about the estate tax exemption? Like if you over contribute technically to a 529, it goes against your estate tax exemption. You have to file an estate tax return. But how many people get to that 15 million in their lives? Hardly any.
No, a lot less. I mean, if it was for the longest time, it was around $1 million.
Right.
I mean, if
That's
you look
not
at the
hard to
price,
get to anymore.
look at the price of a house, look at your retirement accounts, and by the time you get there, all of a sudden you're at the $1 million, you're plus over, and people were hitting it. And the government at least made the change that it keeps the money in the people's pockets instead of a 40% tax rate.
Right. Now, funding things like Social Security and funding all the spending, that's obviously, that's above our pay grade. That's above, that's above and beyond what we're talking about here. What we're trying to drive home is the benefits of everyday people in our client base to use these sorts of things.
Yeah, I will be
That's
opening a Trump account. I know that.
okay. Yeah, and I mean,
It's free money.
right. You should. My son or my daughter, our last child was born at the end of 24. We're eligible for the account. We're not eligible for the $1,000 bump up,
Yeah.
the $1,000 contribution. So if your child was born before 25, you can still do it. You just don't get the government contribution from it.
Yeah, it's nice of the government to give me some tax dollars back in a little bank
Yeah,
account.
that is nice. That is good. So you mentioned hitting on all this stuff before. So you hit on these things better than you mentioned guards, catchers before, and in baseball in general. People hitting up and down lineups 220, 230, 240. It just like you just get sick of watching. It used to be where I don't know what's going on with the screen. You're muted now.
Don't you just love technology?
There you go. There you go. But like nobody hits 280 anymore. Like there's one guy on a team that'll hit 280 and everybody else is sitting there hitting 220. And it's the analytics, and I understand all that. That's affected baseball too, but it's completely changed.
Yeah, I just pulled up one of the Major League Baseball year by year averages. Back in, let's just go to 2012, it says the league batting average was like 255,
Okay.
which isn't as high as I thought it would be. But back in the early 2000s, the average was like in the high 260s. Now we're down into like the low 240s.
Oh man.
I mean, it's just pitching is getting great. I mean,
Yep.
guys are more and more guys can throw triple digits.
Sure.
I mean, you got Paul Skeens in Pittsburgh with a 1.45 ERA or something, and he has more losses than wins because they also are like the Guardians and cannot hit a baseball.
Yeah. Yeah. If you look at the 3 true outcomes approach, that's part of analytics. So every at bat, they're only concerned about strikeout, walk, home run. So a single doesn't mean anything to some people anymore. Getting a single, getting a double, these things still matter. But if the next person on board can't get you over, there's no point in that double. So if I watched a few other teams this year. If you watch like the Yankees or the Dodgers, and yeah, they're high payroll, they're big money teams. All their guys are hitting 220, 230, 240 also. But what they're doing is they're getting on base. They're not taking wild swings. And if they get on base, they'll take their walks. And then the next guy comes up, doubles them home or homers them home or whatever it may be. And all of a sudden they get 2 runs. We saw that during the playoffs last year against the Yankees.
Yeah, the Yankees have a lot of patient hitters, which is there. I feel like
Absolutely.
I'm not a stats expert, but I bet if you looked up their walks, it's a lot higher. And then they have bats in the lineup who can hit them in.
Oh yeah. Yeah, that's the OPS on that, like the on base percentage plus the slugging. That's the new batting average. Like, that's the new important stat because that's just it. Just like you said, you got guys that are putting together good at bats and being patient, getting on base, and then the next guy comes up and, can hit 35 bombs a year. And a lot of that is going to be when people are on base.
Bring back the steroid baseball era where
Hey,
guys were
I'm
hitting
not
60
against
or
it.
70 home runs a year. It
I'm
was
not
fun to
against
watch the
it.
race on ESPN. You would
It
see that
was.
all these guys are just ripping the ball. Sammy Sosa, Mark McGuire. Yeah, then you
And
had
you had
Albert
like,
Pujols.
yeah, you had guys back then that were hitting 30 homers that were batting eighth. Like
Mhm.
your number 7, number 8 hitter was hitting 30 homers a year.
We need to rejuice the baseballs, whatever they had back then.
Everybody needs to play every game in Coors Field in Denver.
Yeah. That's a one thing too about like every other pro sport, like basketball, your court's the same size. In football, the field's the same size. Baseball, every field has its own little quirks, and yeah, the infield's the same size, but the left field fence is different, center field is different. I
Very
mean, look at
true.
Fenway. Left field, you have a monstrous wall, and the other outfield is like nothing.
Right. Yeah, you got a monster in left field, and then in right field, you have the pole that even comes in a little bit that you can basically wrap a foul ball in any other park there, and it's a home run to right
Hmm.
field. So that's what makes it unique. I like it. But you're right. There's all these different elements that come into play too.
Yeah.
All right. Well, you and I will apply to be the next Major League Baseball commissioners. We'll take it 50-50. We'll head it up. We'll be a two-headed commissioner monster.
There we go.
But we talked about some of the changes in the big beautiful bill. Obviously, if you have questions on any of this, give us a call. You can look us up. Drive by, we get a lot of traffic. 440-886-3550 or brooksidetax.com. And then for Anselmo,
Anselmo, you can reach us at anselmolaw.com or give us a call at 216-485-1040. And again, if you call either number, you'll get a hold of us. They'll be able to connect you to one of us. So,
all right. Well, thanks again, Zach. Appreciate you joining us today for Road to Retirement. I'm Tony. Talk to
all right.
everybody soon. Thank you.
Thank you guys.